Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a great day in the markets today. And in today's action, well, the SPY and the QQQ entering their second day of consolidation in a row. The indexes not moving so much. But we can say that there was some pretty heavy rotation across the board today. Financials with a big move to the downside, consumer defensives and utilities as well. However, we did get some price support and positive rotation into healthcare, semiconductors, and even the Russell, inclusive of growth stocks overall. We had some pretty big moves on individual names, which of course we're going to get into later on in the video, and identify whether or not it's still a good time to buy the dip on certain select stocks, or might we be better suited to wait right now for more announcements on those reciprocal tariffs. Talking about those reciprocal tariffs, what we're going to do in today's video, number one, we're going to go through a few elements of news. We got some information on new tariffs today, but only in the form of reciprocal tariffs on sectors, not countries specifically. Trump threatening to impose 200% tariffs on pharmaceuticals and 50% on copper imports. Now, we've been waiting all day for new letters to foreign nations, similar to the ones that we got yesterday. We're supposed to get a lot of them today, but that did not happen. Trump spent about an hour and a half hosting a cabinet meeting. However, we did not get new information on some of the things that we were getting yesterday in terms of new tariff rates for many different foreign countries. Yesterday, we got 14 of them, and as I said in yesterday's video, they were largely the same. As a matter of fact, a little bit under what the tariff rates were on April 2nd, the infamous Liberation Day. So what we're going to do first is we're going to recap those sectoral tariffs and what could be expected into the future. Number two, I thought it would be interesting to bring you guys this piece of news right here. Bank of America clients step up their selling. So we're going to take a look at what exactly retail clients are doing and what exactly their institutional clients are doing. And yes, we do have new updates from the Smart versus Dumb Money Confidence Index. What is retail doing? What are institutions doing as measured by Sentiment Traders Analysis right here? Couple that with the article and also with AAII sentiment surveys too. We're going to kind of tie it all together and see where we stand in these markets, who are the net buyers, who are the sellers, and try to determine why and how we should position as traders and investors alike. After we're done those two pieces of news, we're going to jump into our technical analysis portion of the video where we cover our major market rundown, cover all the indexes, which ones are buys, which one are not. And then we're going to go into our big tech names and derive the exact same things. Which one of these big tech names are potentially good buys for either swing trades or long-term positions, and which ones are maybe just holds or possibly sells into take profit areas. At the end of the video, of course, we're going to take a look at our biggest gainers and losers of the day. Many stocks had some pretty significant losses today, but you also had some stocks jumping a lot to the upside. So we're going to try to cover as many of them as possible in the ending portion of the video. So keep that in mind. It should be a fairly fun video today. Let's jump right into the action, shall we? So the SPY down about 0.05, the Q's up about 0.06. But if you just looked at the indexes today, you might think the market didn't do too much. We had some fairly big moves on individual names, even within big tech, right? NVIDIA up 1%, Google down 1.38, Amazon down 1.84. So you can see big tech was a mixed bag today, but we did get several very nice price increases here throughout the day on different semiconductor stocks. Micron popping up almost 4%, AMD was up 2.25%, and a number of different names were moving a little bit higher, despite not getting much performance from AVGO. Financials were down, especially the banks, JP Morgan and Bank of America, down 3% respectively, as financials had one of their weakest days in recent memory. Consumer cyclicals were kind of all over the place as well. Defensives, Walmart dropping 2.25%, and other weakness in defensives too. And then you get into healthcare, industrials, and the bottom half of the market, which was really a mixed bag. So if you were looking for individual stocks today, you probably would have found some very decent buy the dip opportunities, depending which names you were looking at, of course. In terms of the one-day relative performance, you can see that even better. It was a really mixed market today. Energy, healthcare, technology moving a little bit higher, but a lot of sectors to the downside, led by consumer defensives and utilities overall. So before we get into more technical analysis, guys, let us do a quick recap of what happened with these sectoral tariffs today. This 200% might seem like a very steep headline, but you have to read a little bit more into it. I'll start with down here. The immediate pharmaceutical tariffs that could be coming in the near-term future in the next 1 to 2 weeks is going to be 50% on copper imports and 20% on pharmaceuticals. However, that could be upticked to 200% over the next year. We'll be announcing something very soon on pharmaceuticals, said Trump during his cabinet meeting. We're going to give people about a year and a half to come in, and after that, they're going to be tariffed if they have to bring the pharmaceuticals into the country at a very high rate, like 200%. So there is going to be a buffer zone here of roughly a year and a half before it gets stepped up all the way to 200%, but you could expect some 20% tariffs right away. And of course, certain pharmaceutical stocks definitely did not like that today. NVDA candled down on the news despite ending positive on the day. And a company like Merck as well was up a lot more in the early morning, but did retrace some of those gains. So pay attention to some of those pharmaceutical names. If those are ones that you want to play, it might get a little bit volatile here over the next 2 weeks as we wait for that final sectoral trade announcement. Now, as I was saying, I've been waiting all day, guys, all day for these country-specific tariffs, but as of right now, we don't have them. Maybe if I take a look at the futures and we get some big red or big green, there might be a tariff announcement and we may be able to cover it live in today's video. But as I said, it's about 6:15 p.m. Eastern, and as of right now, nothing much just yet. So we'll take a look at that in, if it does come out now. If not, we'll recap it into tomorrow, but I'm pretty sure you guys can understand what will be the impact, right? We had 2 different releases of those tariff events yesterday, and each of them resulted in some losses for the indexes. So if more tariffs are, of course, announced for that August 1st deadline, you could probably expect a bit more consolidation in the indexes in the after hours session tonight. Now, one thing that I wanted to bring to your attention, guys, is we're going to do a little bit of both momentum analysis, but also retail versus institutional analysis. And I think it's very interesting to look at this, once every couple of weeks, just to get a sense of who is currently buying the market and by how much, or are they selling, right? So here we go. Bank of America clients step up their selling. Now, keep in mind, Bank of America is not everybody, but it gives us a very good sample size as to what institutions and retail clients are doing. Now, Bank of America Securities Equity and Quant Strategist Jill Carey Hall said that last week, right, clients were net sellers of U.S. equities for the second straight week, the biggest outflows since late August, 6.9 billion, and the 6th largest outflows in history since 2008. Clients sold single stocks, the biggest sales since July 2023, while snapping up ETFs, so moving away from single stock exposure and going for the broad market exposure instead. Selling was led by institutional clients who have sold in 8 of the last 9 weeks. Hedge funds were also net sellers for a 3rd consecutive week. Private clients, which are deemed to be retail, returned to buying after selling the prior week and have been buyers in 28 of the last 30 weeks. Now, all of that's good. Let's compare it to sentiment traders analysis right here. And you can clearly see this is smart money versus dumb money. You can call this institutions versus retail essentially. And you'll notice the red line is retail. The red line usually follows the direction of the market, right? So that being said, the retail traders usually just follow momentum. If momentum is to the downside, you can notice clear selling. And if the momentum is to the upside, of course, you will notice net buying for retail. Now, that is a little bit different when we take a look at the institutional analysis right here, which usually do the exact opposite. When the markets are dropping, institutions are buying. When the markets are rallying, institutions are offloading what they bought during the dip, right? So that being said, right now, you can get a sense right now that retail is pretty much tapped out. They're getting into overbought conditions, and you may not get much price support from them in the event that we have a small little dip. But who has a lot of buying power right now? It is definitely the institutions, as you can clearly notice from this line down there. So in the event that we do have some further consolidation in the markets, you would expect the institutions to start loading up their bags once more. Couple that as well with the fact that we have a lot of bullish seasonality in the month of July. As a matter of fact, out of the last 10 Julys overall, you can see that 10 of 10 were positive with an average return of 3.35. So if we get any quick little slides to the downside, I would expect institutions to be net buyers because they have the room right now. And couple that with positive seasonality, you could see a market during July whereby most of all dips are bought and the big money could be coming back into that trade as well after being net sellers for a good majority of the last few weeks. Now, Hall added that corporate client buybacks slowed to their lowest weekly reading since October 2023. Clients sold stocks across all 11 GICS sectors for the first time since early 2022. Hall noted as well that the last time selling was as broad-based. The subsequent 4-week S&P 500 gain was 8%. 8%, right? So it's funny, even though institutions were selling, we have some statistics that the last time they did that, the market actually continued to rally to the upside. As for ETFs, the ETF pivot that they're currently doing, Hall says that clients bought equity ETFs for a 5th week in a row. With this, they continued to add blend and value ETFs for the 5th week. We know, as we've watched a lot of this rotation manifest in the last 3-4 weeks, guys, value has been getting a bit more rotation right now. Tech and growth is still the most favored sector, but more money is currently piling into value and other defensive sectors of the market at the exact same time. So more money is currently coming into the markets overall. Now, they offloaded growth ETFs for the 5th time in 7 weeks. So although retail is still heavily invested in their growth and AI stocks, we can see a clear institutional pivot overall. And a lot of that started when you remember, we covered this last week, guys. When we started the brand new quarter, we noticed a big day of rotation. And now if you try to take a look at the rotation, it's not so clear, but overall these sectors, right, defensives, industrials, and all of that stuff have been net higher over the course of the past 1 week since that rotation started. Now, it's obviously not going to be as clear cut as every single day tech will be down and every single day value and defensives will go up. No, you're going to find some intraday rotation, but overall more money is coming into some of the sectors that have been left behind, which is also an analysis that we've done too. Now, where do most retail investors stand in terms of bullish sentiment? We remember that during the tariff sell-off, sentiment got very bad. As a matter of fact, as bad as it was in the depths of the COVID pandemic, but also in the depths of the great financial crisis, that has now pivoted to a more normalized sentiment. We can see here that as of the most recent last week, 45% of all investors do see that we should be, or do have a positive outlook on the market for the next 6 months. 22% are neutral and only 33% are bearish. You can see that this number has been getting progressively better over the last month, but additionally over the past 2-3 months since hitting some of those tariff lows. So I'll remind you, most people still remain bullish. We have a pivot here from the institutions, clearly from growth to value. They're using ETFs to do that rather than picking single names. We also understand that in terms of seasonality, July is a very bullish month. We already went over the statistics over the past 10 Julys. 10 have been positive. It doesn't mean that, you know, this July is necessarily going to be positive, but we have a pretty good indication there. And what as well do we have coming up in the month of July? We have corporate earnings, guys. And I'll remind you, earnings, a lot of the companies that gave earnings was back here. They sandbagged their earnings. They stopped providing guidance. A lot of companies stopped giving guidance for the end of the year, but they were also very timid on their Q2 guidance. Another thing we have to keep in mind, guys, is the dollar. The dollar has been weakened, and this is going to be a currency tailwind for EPS. You might see some EPS surprises because now companies are going to be benefiting from bringing back foreign currencies into the dollar at a lower rate, which does tend to bolster those EPS numbers. So we have a lot of positive catalysts in the month of July that we can possibly look forward to, but also additionally, we know that institutions have been net sellers of the market, and anything that could possibly happen, they do have a lot of room to go shopping, as we can clearly see from this analysis down there. Sorry, let me move my big head out of the way. So essentially, are we still in a market that could see some buy the dip activity? In my opinion, the answer remains yes. So that is a quick little news recap. Hopefully you guys enjoyed that analysis. Obviously, we could talk about rotation, retail versus institutions, and a lot of charts like that. We can talk about that for half an hour, but I wanted to keep it short and just summarize my thoughts. So hopefully that was helpful for you guys overall. Now, in terms of where we stand on the technicals, well, the SPY is very clearly, guys, still in a very nice daily upswing, right? We are into a few days of consolidation, but it's not the end of the world. Big support below us, 609 down to about 597. We know the bulls have a lot of space. Anything above 592 is looking for a daily higher low for possible further extension. What could be some catalysts for further drops? Well, I mean, until Wednesday, which is pretty much tomorrow. Well, they say Wednesday, but in my opinion, it could come pretty much all throughout the week. It's going to be these tariffs, right? We're going to get a lot of these probably tonight, probably tomorrow on Wednesday, and maybe if they don't have the time to get them all out tomorrow, maybe we can even see those on Thursday or Friday. So we definitely have some catalysts for short-term declines, but we got a lot of support below. We know the institutions have a lot of room to buy any and all dips. And we're just looking for some consolidation on the higher time frames as well. The longer term bulls are in full control of this chart. Weekly chart looks gorgeous. So even if we get some daily downtrends right there, we just need to understand that we're looking for some weekly higher lows for some possible further trend continuation. And I would not be surprised if this earnings season is actually quite good for the markets. Moving on to the Qs right now, the Qs are about up about 0.06%, but who is in control? It is still your daily bulls. Daily bulls actually with a daily uptrend right here. If you forfeit these lows, 544 without making new highs, right? You can either do the full flush and go for the daily downtrend like that, or you can fail new highs and set the daily downtrend like that. Either or situation would result in some very simple weekly consolidation. Nice support below 537 down to 523. And we know who is in control of this chart. It is very clearly your weekly bulls right now. At this point, anything above 523 is just looking for a nice higher low back test, right? The good old breakout, retest, and run could be a very interesting trade, especially since we're getting a lot of the big tech earnings, guys, towards the end of the month of July. So if we get a bit of consolidation early on in the month, that would kind of line up with the timeline of weekly consolidation into some possible rallies. And that is a structure that I'll be paying very close attention to leading into the next 2 weeks of trade. Moving into financials right now. So financials kind of leading the way to the downside. Decent sized consolidation here in the last 2 days of trading, but the bulls remain in full control. It's a clear daily uptrend looking for a higher low. Anything above 49.82 roughly looking for a higher low. And decent support down here, 51.5, down about 50.7. So keep that in mind. Overall, the weekly bulls still remain in full control of this chart too. We had a nice bull flag right there, beautiful breakout, and even on the weekly time frame, guys, you're looking for the exact same thing. This move down is also weekly consolidation, looking for the higher low for possible further trend appreciation. We get some of the bank earnings coming up next week, right? If you take a look at JP Morgan, they have their earnings next Tuesday. Take a look at Bank of America. They also have their earnings next Wednesday. So keep all of that in mind. If we get some consolidation on the banks prior to earnings, I think that's very healthy, right? Because you don't want to get an effect like CrowdStrike or like other names that we saw earlier in the last few weeks, whereby they run an absolute ton into earnings and then they have great numbers, but the markets go down because they ran too much into earnings. I mean, we saw it with CrowdStrike. We also saw it with Micron, which had fantastic numbers, but pulled down just the same, just because they had run so much into earnings. So maybe the banks right now are doing a little bit of consolidation, create some room that if they have some pretty good numbers, then we can get some upside follow through and just continue on to some of those trends. It seems like a very likely and probable scenario, but of course, that's just speculation. We'll actually see what happens. And if we come down in a meaningful way, guys, there's tons of very beautiful support levels, right? If Bank of America somehow comes back down, there's some great retest locations down here. 44 down to 42. The 200 EMA is right there, and it is a very nice, significant area of overall support. So we'll be looking to play some pullbacks on the financial institutions if they do drop. Moving into healthcare right now. Healthcare up about 0.45%, but they were up a lot higher. And then we got the pharmaceutical news, right? That's what kind of unwound this move, but they were up pretty much almost, 1.5% early this morning. The chart that makes the most sense, in my opinion, because the daily is getting really, really choppy, guys. Focus on the weekly time frame. We're trying to go for the weekly expansion, and that will only happen if you get a break and close above roughly 137. If you see the break and close above, it is the first weekly uptrend established since the months of December and January back there. And at that point, you're just looking for a new monthly upswing. We got a lot of support right now at these lower bound ranges, which is pretty much 136 down to 122. So I know it's very, very choppy and the sector is moving slow. A lot of headline risk as of lately. Of course, we got the pharmaceutical risk. Prior, in the weeks before, we had a lot of risk for the healthcare insurance corporations, CNC, UNH, etc., etc. So the sector's been moving slow, but it is still one of my favorite plays here for the next 6 to 12 months. If we're looking for a slower, but probably almost guaranteed expansion here, as it is one of these sectors that is lagging behind the S&P the most. Moving on to semiconductors right now, they continue to be your lead bulls in the market, 1.33% to the upside. So we're watching for some consolidation. And we were noticing yesterday that any move lower, looking for a higher low, anything above 272 was looking for a higher low. For possible trend continuation, we got a daily higher low. The bulls tried to run it up again. However, if you break yesterday's low, I know it's very small, but it is going to be a new daily downtrend, and you might just be expecting a little bit of weekly consolidation. We are not deeply overbought on the weekly time frame just yet. So that being said, the bulls can deeply expand if they really want to. However, if we do get some pullback, I want you guys to understand the relevant levels where we might come back into. And that is probably 260 down to about 248. I know some people might say it can't happen, guys. Anything can happen in my experience. It will be a very quick 6 to 8% pullback. You don't need that much, right? You only need the SPY and the QQQ to go on some weekly consolidation, like maybe like a 2-3-4% move on the SPY, a 2-3-4% move on the QQQs for XYZ reason. And the semiconductors, being a more volatile industry, can pull back and do a nice little back test down there. So just pay attention to that level on the weekly. But right now, the bulls are looking very, very, very good for some continued expansion. My favorite name that still hasn't really played a lot of catch up is ASML. I still think ASML's valuation is really fair right now in around the $800 range, especially considering their fundamental expansion that they will be having here into 2028. Look at this EPS expansion. Look at the revenue expansion as well. I think they'll be doing quite well. And they really haven't benefited from the size of the rallies that some of the other players in the index have had, right? Moving on to the Russell right now, before last. Moving on to the Russell, 0.69% to the upside. The Russell is doing just fine right now. We know who's in control of this chart right now. It is very clearly your daily bulls, right? So looking good for the expansion, looking for some higher lows. The time frame that makes the most sense, in my opinion, is the weekly. We got a very nice support range down there, which is 217 to 208. We literally just broke above it and now trying to back test in the event we get a little bit of drawdowns here. Support previously, resistance, support for the markets, support as well. And now it should be acting as support once more. So if you do see some drawdowns in the Russell, could be looking to form a new base before moving on to another leg higher. That's if they don't just go for it right away. And the resistance target above is 232 up to 225. So keep all of that in mind, guys, as you're looking for continued rotation. Today was another down day on XLP consumer defensives. One of the names that I'm looking for some short puts, I don't know if it's actually going to get down there, but if it does, I'll be playing it. Walmart 93 down to about 89 is a beautiful level. It's the 200-day EMA, as you can see down there, but also it's been acting as a nice level of support all the way since back September. I know the tariff episode sent us a lot lower, but overall the bulls have been defending this location here for a large portion of the last 3 months, let's call it, right? So looking not too bad on consumer defensives. That's just one of the names that I'm kind of looking out for in the event it comes down a little bit lower. Now, take a look at the VIX. The VIX, unfortunately, well, depending on which side of the aisle you're on, right? Fortunately, if you're looking for market expansion, the VIX has come lower, right? But if you're looking to sell options, well, you kind of want a little bit more volatility. The VIX not doing too much. We will see if and when Trump posts those new letters to his Truth Social, targeting more nations in terms of what we're looking for right here, yeah? All of the different countries. Well, in that case, you might see a little bit of an uptick on the VIX tomorrow, and it might just be another opportunity to sell some puts on your favorite companies into some support locations. So pay attention to the moves on the VIX. In terms of the dollar has not been moving at all. It should be good for corporate earnings, and it should be good for foreign institutions, foreign governments. If they're looking to buy back into US bonds or US equities, they will be favored overall. Moving into the yields right now, yields upticking again. So yields have just been very, very, very choppy, guys. In my opinion, until we get closer to that September rate cut, you know, yields are kind of going to move all over the place. We are still looking for the monthly breakdown of the 10 and the monthly breakdown of the 20-year yields as well. It's just not happening. We're staying stuck between 4.7 and 5% on the 20-year, and roughly between the 10-year right now, we're stuck between 4.25 and about 4.5. So it's just kind of oscillating. I still do think that bonds are a good trade to be accumulating, but like I've been saying, guys, for the past 3 months, every time I bring up this chart, you need to be very patient with this trade overall, right? You might see me add another contract to my Leap trade on this, but I'll put a little bit more time, probably targeting like June 2027, because even when it does start running, it's going to start running a little slow in my humble opinion. Moving on to gold right now. Well, gold also doing not too much, right? The bulls are trying for it. We had a daily downturn right here. Nice engulfing move of the most recent leg of selling. They tried to establish a base shallow into the support zone, but now we're kind of just drawing down and drawing down. So the bottom end of support is 33.10 down to about 32.62. Not much momentum to be had right here. It's a battle on gold right now, right? You know, a lot of the positioning is not so easy anymore. Tariffs, when they were announced previously, you could see the impact that it had on gold. People were rushing for gold, but now a lot of tariffs were announced yesterday in or around the exact same rates as Liberation Day, and gold really didn't get any lift whatsoever. As a matter of fact, it went down. So that correlation is kind of just switched off right now. Now, gold doesn't look bad on the higher term timeframes in terms of looking for some weekly expansion. But of course, it's not getting the same level of correlation as we had back in the month of April. So all I'm here to say is if we are positioning for some gold longs right now, there's a very clear stop loss level, and that will be below 32.43. Because if we unwind this entire move, right, and give back too much of this weekly move as well, you can make an argument that we might just possibly be going into a consolidation phase for gold. It's been hovering around here for the past 2.5 months. We might just be going into monthly consolidation after being monthly overbought for the better part of the last 4 or 5 months. You know, eventually the monthly also needs a bit of a downswing, and that definitely would make sense. And that downswing on the monthly could take us down into the lower 3,000. So keep that in mind. That's why I'm not a big fan of holding on to gold longs. If we break a significant level, it would show that the bears possibly want to unwind a little bit more positions and maybe pivot to some other more growth-oriented assets now that gold has put in its move, and now that the fear in the market is a lot less than it was a few short months ago. Moving on to Bitcoin. Bitcoin up about 0.64% today, doing nothing. It's just literally barcoding, right? So we know that the bulls have a very nice daily uptrend. They're establishing a new base of support right here around 108. We'll see if we get the breakdown. It's a daily downtrend, but the weekly time frame here paints the clearest picture, in my humble opinion. 105.5 down to 101 is your support range. The bulls have been accumulating in or around that range for the better part of the last 8 weeks. It is an accumulation above the previous all-time highs, looking very good. And another clear time frame for me is the monthly. The monthly is not looking too bad at all. I do still have a bullish leaning bias for Bitcoin because of seasonality and just because of the risk on nature that the market is having right now. And I am a fan of playing any sharp pullbacks on Bitcoin. I'll be looking to sell puts under the market. And you guys know me, I use BITX as a proxy for that, but you can also use the non-leveraged ETF such as IBIT and try to run it in the mid 50s range. That's if we get some very quick and sharp drawdowns in Bitcoin, which in my opinion will only happen if we get something similar on the SPY and the QQQs, as Bitcoin has largely been following the market indexes for a better part of the last roughly year, I would say, right? That's everything for our overall market analysis, sector analysis, and a few commodities. Now let's take a look at some of the big tech names, shall we? All right, so taking a look at Apple first. Apple was roughly flat on the day, and we know that Apple's been stuck in this range for the better part of the last 3 months of time. Resistance stays put at 222 down to 212, and support range stays put at 196 down to 187. Even though it is stuck in a range, we can clearly see that the bulls are trying to make an attempt here and go for the crack of the resistance range. So I am still a big fan of playing Apple. I need it a little bit lower. If we come down a little bit more for a few days on Apple, I will be playing some short puts in the lower 200s, which is something that has been very profitable for me overall in the past roughly, I don't know, 6, 7, 8 weeks that we've been doing this similar trade. And also for some swing trade longs, it may not be too bad of a proposition. Earnings for Apple are July 31st, so we do have some time for the bulls to try to put in that expansion leg, but I also would not be opposed to just, even if we do come down here a little bit more, guys, playing the bottom of the range with short puts seems to be like a very decent proposition for me. All eyes during earnings will be, of course, on the rollout of AI and on the infamous refresh cycle of the iPhones, which has not been that fantastic as of recently. I'll remind you guys, Apple is doing a ton of buybacks, but even buybacks are not enough to compensate for the very weak revenue growth rate that Apple's been having for the past 2 years. Moving on to AMD right now, AMD up 2.25%, but we also know that AMD is still in a bit of a daily downtrend right now. But that's fine. It all started with a rejection from resistance 145 to 155, let's call it, which is the next area above us. Now, daily downtrend means that the bulls are currently taking a little bit of a breather and allowing for a weekly pullback. This weekly time frame is the clearest time frame on AMD, in my humble opinion, looking for a higher low on the weekly. Anything above 108 is looking for a higher low, and where better to establish that higher low, maybe into support, which starts at 132 down to 119. The way that I'm playing this one is simply looking to sell some put options into the support range, and I've done that a few times over the past week and a half, and so far it's been a very profitable trade. Whenever AMD has a quick and sharp candle down, 3% down on a couple different days, it's usually a good proposition to find some entries down below there, and I would not mind being assigned, because if I do get assigned, I'll be looking to write covered calls until the stock possibly benefits from a bit more of a rally to the upside. AMD overall, even for a long-term portfolio or a longer duration swing trade, if your fundamental thesis is the expansion of their EPS and revenue, it has not really happened yet, right? We know that most of the EPS gains will be coming in the next few years, and most of the revenue gains as well will be coming in terms of the next few years. So I still think, even though AMD is significantly off its lows, I still don't think it's actually late getting in here if that is your thesis, going for the multi-year expansion of revenue and EPS. On to Amazon right now. Amazon was down 1.84%, and we could see Amazon's really been struggling with the resistance range, right? 228 down to 217. That being said, if we crack this guy right here, 217, that, without new highs, is a daily downtrend and would just be synonymous with a bit of weekly consolidation. Now, I don't see any major red flags on Amazon's chart right here. The weekly bulls are still an absolute full control, and we just be looking for a weekly higher low. Anything above 207, looking for a weekly higher low for possible further trend continuation. If we come back into the mid, 215, 213 range, I may be adding a couple more shares to the long-term portfolio and maybe even playing some short puts. Because if we come down into the 215 range, that means that possibly I can write some short puts under 210 towards the bottom end of here, which is closer to support. Overall, Amazon, guys, has a very bright future for the next few years. And don't take it from me, even though the valuation right now is pretty adequate. I mean, it's not cheap, it's not expensive. Take a look at what they're doing on EPS for the next 4 years. Take a look at what they're doing in terms of revenue for the next 4 years. It's going to be a very nice expansion phase for Amazon, which is why it's still one of my favorite trades in the market right now. If you have a longer duration to the trade. Moving on to Google. Google was down 1.35% today, sadly for them. And we know that Google was looking to protect this guy right here, 174.50. A crack of that would be a daily downtrend, right? But we also know, if we take a look at the higher time frames right there, a weekly downtrend, a daily downtrend, excuse me, is just looking for a weekly higher low, guys. The longer term bulls are still in control of this chart. Anything above 163, just looking for a weekly higher low for possible further trend continuation. Now, I've talked about Google ad nauseum on the channel for a long time now, right? Saying that in or around the 170 range is a pretty good risk to reward trade, just focusing on the fundamental valuation of the company. But something else that I've been doing a lot of recently is playing the living heck out of this lower 170 range, selling puts under the market. It is very solid support for the bulls, and I will continue to do that. I have an active trade on Google right now doing that exact same thing, although my trade is a little bit higher. I don't mind being assigned in this lower bound range right there. And even for a bit of a swing trade long on Google, guys, if you get a bit more of a pullback, decent entry proposition for a short-term swing trade, taking it from level to level, from in or around the support zone to the resistance range, which stays put 191 to 184. It's just right now, it's kind of in the middle, right? So not providing the best risk to reward, but a little bit more of a decline could free up that risk to reward trade in terms of short term. Moving into Meta right now, Meta flat on the day, 0.32%. Meta's kind of been barcoding and still not flushing the lows of last Wednesday. If we do break down below 711 right there, you're going to be looking for a daily downtrend. And what is a daily downtrend for Meta? It's just looking for weekly consolidation, right? They cracked the all-time highs last week into a bit of consolidation, but we know the weekly time frame is the clearest time frame for Meta as well. We would just be looking for a weekly higher low. Anything above 679, looking for the higher low. You have some congestion right here, which the bulls can use for support and possibly go for that one leg higher. In terms of Meta, where I would be looking to add some shares would be on a break of 700. If we can come back down here, 690, 680, off of any overall market drawdowns, it could be an interesting proposition at 720. I mean, I'm not saying the stock is too expensive, but it is at the higher end of what we're looking for here. Meta was a fantastic proposition this entire time, and I was very clear about that, right? But now it's kind of just a nibble if it comes down there for me. No swing trades, though. Moving on to Microsoft. Microsoft down about 0.22%, but not really losing anything, right? Microsoft's just been kind of consolidating near its all-time highs. Pay special attention to the lows of last Wednesday, though. 488. If you get a crack of 488 without any new highs, that is a daily downtrend, and it might just be the start of weekly consolidation. A logical location for weekly consolidation on Microsoft, you could argue that is all the way down there at 468. They're going to have to prove a lot to us come earnings time, yeah? Earnings for Microsoft is the 29th of July. The stock has ran an absolute ton in the most recent quarter. from the tariff lows, and this is Microsoft, it's not Palantir, right? From the tariff lows, that is a 45% rally, and we're currently coming into the top end of Microsoft's historical price to earnings ratios that normally it trades at. So if you guys want to see even more of a push on earnings, it's going to have to be some ridiculous numbers overall. If the numbers are somewhat underwhelming and we start weekly consolidation, the bulls, of course, have tons of space, right? Anything above 357, looking for a weekly higher low. The next desirable area for me for some swing trade longs would have to logically be down there. I'm not a big fan of buying weekly overbought on Microsoft, top end of valuation, and daily overbought conditions as well. Although the trend is your friend, the risk to reward, right, is not the best in my humble opinion, but it's a fantastic stock. I'm not adding any more shares to my long-term portfolio, but I'm also definitely not selling any right now. On to Netflix, kind of the same analysis, right? Fantastic company. However, top end of the valuation range right now. I'm not adding any long-term shares. I'm just holding the ones that I have. I'm not selling any either, right? Daily downtrend on Netflix is very clear. And what we can see right now is that they're embarking onto a weekly leg of consolidation. That being said, anything above 1179, looking for a weekly higher low for possible further trend continuation. And Netflix kind of suffers from the same thing that Microsoft suffers from. Since their most recent quarterly earnings, the stock is up 62% to the highs. Maybe not so much anymore, but it's definitely going to be a prove or show me quarter for Netflix overall. Netflix has earnings next Thursday. So we're going to start off next week with a banger. Going to be a lot of juicy earnings coming into next week. So keep that in mind, right? I'm pretty sure that Netflix earnings will be very good, but are they going to be so good that they will warrant another 10% pop on the stock? Maybe, but we also have to be open to the idea that it might just be a phase of consolidation for Netflix as it starts to grow in to the expensive valuation that it now, that it's now trading at. Moving on to NVIDIA overall. So NVIDIA up 1.11%. The bulls are looking very strong on NVIDIA right now, hitting into the top end of the 160 psychological level as well. We know that we had a bit of a consolidation day last week. Higher lows are set and looking for some expansion. Now, we haven't really expanded the highs that much over the past 3 days, but it could just be coming. And even if it does not, we have a little bit of space to work with here. Anything above 151.26, looking for a higher low and possibly go for another leg of daily upside. Now, in the event we unwind the move and move a bit lower, the very logical area of pullback would be your prior all-time highs, which would be roughly the same range, 150 to 145. Suffice to say, if we do come down there, and it's not that far away for NVIDIA overall, right? It's only about 6-7%. Sometimes NVIDIA can move that in a single day, especially on a big red day for the SPY or the QQQs for XYZ reason. It'd just be very logical, right? Beautiful weekly uptrend, looking for a back test higher low. The 12 EMA is going to be curling up into there as well. And maybe that's where the bulls find a bit more support and then embark on the next journey higher. NVIDIA doesn't have earnings for a while. And the valuation right now, well, at 160, it's like 10+% higher than it was. So about a 35 forward price to earnings, about a 1.55 peg right now. Not the worst valuation overall, but you also can't say that it was a significant buy like it was down there. I'm pretty sure, it's not, I'm not advising people to buy this up here, right? It's looking very good. Momentum is very good. But if we're holding stock, I don't see any reason to sell. But if we're looking to add, well, maybe, just maybe, you might be better served by waiting for a pullback overall, especially if you already have a large position. Moving on to Tesla right now. Tesla up 1.32%. I'm sorry. So Tesla overall, guys, still in a daily downtrend, coming into support right now, 303 down to 262. We know that Tesla's been struggling a few times recently, mostly because of Elon's interactions with Trump back here. And thereafter, more recently, Elon forming the new America Party, which kind of detracts from his role as Tesla CEO. At least that's the common consensus in the market right now overall. But we're kind of just consolidating right now in a tight range, a range between resistance, which is 360 down to 338, and below support, which is what we just said, 303 down to roughly 260 overall. We will see if the bulls are able to protect this level, 275. If you break that, that is a weekly downtrend and might just be leading into a bit more monthly consolidation. Now, it's a big level for the bulls, guys. You have to admit, right? Big level, big resistance, support for a while, resistance back here, right? So many touches. So it's a very big level for Tesla to maintain, but a big focus for the company is going to be on their earnings come Wednesday, the 23rd of July. A big focus is going to be on EPS, the impact of the new Big Beautiful Bill, which removes tax incentives. It removes a couple of things, right? EV credits for consumers, but also EV credits between companies. So keep that in mind. Tesla makes a lot of money like that. So everybody is curious to see what is going to be the margin impact. Those earnings are going to be very important. I don't expect a tremendous breakdown of the stock prior to earnings, but I also don't expect a tremendous rally. I think people will kind of just be sitting on the sidelines waiting to see what the impact of those regulatory credits lost and the EV credits to consumers lost are going to be on margins. And what is the company's guidance moving forward, especially in terms of forward delivery numbers? Moving on to Palantir. Palantir up 0.42%. Palantir looking good for some expansion right now. We know that the bulls had lost the daily uptrend with this flush. Now they're looking to get it back. There's two ways to do that. Either they can engulf and reset the daily uptrend here, or they're going to do a two-step process. One thing's for sure right now, in terms of the bounce, it's a very nice bounce size, 618. So usually when they bounce 618 or higher, they have a very good probability of doing the two-step recovery process. So we'll see if that's something that Palantir is looking to do. However, if the bears roll us over for XYZ reason, the logical area of support is down here, 125 to 120. It acted as a very nice base of support for the bulls for like 4 or 5 weeks at a certain point, and the weekly bulls never lost control, right? Constantly looking for new higher lows for possible further trend continuation. Palantir doesn't have earnings soon. For them, it comes Monday, the 11th of August, so you could see a little bit of upside rally. The entire focus of Palantir's earnings, in my opinion, is going to be the revenue growth rate, because when you trade at such a high valuation, Wall Street wants to see an ever-expanding revenue run rate, because when your revenue run rate starts declining, right, well, you guys know what can happen. You just have to look at some of the stocks that this has happened to in the past. Elf Beauty, formerly a Wall Street darling with ever-expanding revenue metrics, even though the revenue growth rates are good right now, they're not what they once were. CELH was another such example, right? And it continues. AppLovin was another such example. Their growth rate is now slowing down. However, still fantastic. So keep that in mind. When companies run hot, they have to deliver better and better numbers to warrant the high valuations at which they trade. So we'll keep a close eye on that on Palantir. But so far, the chart's looking decent. Moving on to SOFI right now. SOFI, 3.69%. But look at this candle, guys. A final gap up. Big move towards the open, right? From yesterday's close, this was a 8% candle. But notice, first 15 minutes of the day, this is probably retail. And then we have some net selling the rest of the day. That's not to be said. That's not to say that rather, SOFI is just, can't recover this. But usually when you see, some people call it a shooting star candle, right? When you usually see this candle formation, sometimes it can lead to a bit more consolidation. But good thing for the bulls, they got a lot of space, right? At this point, any consolidation, anything above this level right here, 1735, just looking for a new daily higher low for possible further trend continuation. However, unwind too much and go into a downtrend, and you're just looking for a bit of weekly consolidation after the last 4, 5, 6 weeks have been extremely bullish for SOFI. I mean, just in the last 5, 6 weeks, guys, SOFI to the top, right, from the bottom of the top, 58%. We're not even measuring from the tariff lows. That would be even more impressive. 136%, right? So keep that in mind. In the event we pull back, well, logically, the first level of defense here is going to be the top end of these guys, which is like 1716. In the event we pull back lower, well, of course, we're going to 1614. But at this point, that's a very long ways away. That's like 20 to 28% down for this support. So we may not fully get there. Maybe we just get the intermediate level, which will be the top end of these guys. But I'll be looking to play any and all pullbacks on SOFI. It has tremendous momentum and now a lot more volatility. So if we get a sharp pullback, I'll be looking to sell some put options, maybe 17 if I can find them, yeah? Hopefully that makes sense. Moving on to Uber right now. Uber up 0.83%. Uber is looking like it really wants to go for $100 quickly. Looking very good. We had a nice little bull flag right there. Beautiful expansionary move by the bulls. Consolidation sideways, and now the breakout. So in the event we get some pullback from here, and don't go into $100 right away, anything above 90.25 looking for a higher low, then for a possible second attempt at the ever elusive, but we'll see how elusive it is, right, when we come into it, $100 psychological range. But Uber bulls are looking very, very, very strong. No trade entries for me right now, guys. You mean, technically, we've kind of missed this train, right? The consolidation area was back here. It was a beautiful breakout, retest and run trade. There are many weeks and many opportunities to play Uber in that location, and now you are expanding. I'll remind you, take profit number 1 was at the previous highs, so some of the position, if you did get in there, would have been closed. We are coming into take profit area number 2, which is the psychological $100 mark, so keep that in mind on Uber. I'm not adding any more Uber shares up here. I did my buying on Uber while it was down from the 70 to about 60 range all the way back there, and now I'm just riding my shares. I'm not selling any shares, but I am holding every single one. The valuation, I will redo it in tomorrow's video for you guys, I promise, but it's roughly 20% higher than it was back then. So now we're really coming into like, you know, high 30s forward price to earnings, a bit higher peg, talking about a 1.5. So it's not a crazy valuation, but still definitely not a cheap no-brainer buy as it was back there. And lastly, TSM down about 0.57% today overall, but the stock is still looking very, very good in my humble opinion, right? Everything that goes up must come down eventually, kind of like NVIDIA, right? Beautiful rally beyond its all-time highs. And now we're just consolidating with the bulls in control, looking for a higher low, anything above 221, higher low for possible further trend continuation. But if you either unravel one of two ways, lower high and lower low, or just flush and then lower high and lower low, daily downtrend will be in motion. And then you're just looking for a very clear weekly consolidation phase for this stock. I think it's fairly obvious, right? Who's in control of this move right here? Definitely your weekly bulls, and any move lower looking for higher low, anything above 206 on the weekly, higher low for further trend continuation. The way that I'd be looking to play this one, if we get a few sharp sell-off days in a row and a bit more volatility, maybe, just maybe, we can find some strikes to sell put options down here, 210 to 200, maybe closer to 210, right? But it would be a very decent breakout retest trade to possibly take some further longs. I'm not adding any more TSM shares up here. They're not that expensive overall, but still, I would consider adding on a pullback closer to the 200 zone, but I did most of my buying on TSM back here. That being said, I still expect great things from TSM over the next 2 years, fantastic net margins, and if you take a look at their fundamentals, they will be very strong, guys. Look at this EPS curve for the next 4 years. Look at the revenue curve as well. Looking very good, guys. They're going to be almost 2xing their revenue within the next 4 years, so keep that in mind. TSM is still a very good buy, so long as you can accept the geopolitical risk between China and Taiwan, of course. We always have to mention it because sometimes people forget, but such a fantastic company with a huge competitive advantage in my humble opinion. That's everything for your overall market rundown. Now, let's dive into the biggest gainers and losers of the day, shall we? All right, so we're going to start it off here with the biggest losers of the day. And number one, we have to talk about FICO. So FICO from the top to the bottom today was down almost 19%. And we know that FICO's been struggling recently, guys. They've been getting hit by a few different news articles over the past month and a half, largely having to do with questioning the dominant moat that they have built so far. They have been exclusively the provider of credit scores to a lot of lending agencies, whether that's for personal loans, right? When people's credit scores get ran, that has either been from personal loans or mortgages specifically. So today, what actually came up is this: challenger to FICO credit score gets a green light for use in mortgages. So keep in mind today, the news headline was that the Federal Housing Finance Agency approved Vantage Score 4.0. Vantage Score 4.0 is a competitor product to FICO. This was developed by Experian, Equifax, and TransUnion. So now, Fannie and Freddie will be able to use either Vantage Score 4.0 or the FICO model to run people's credit scores. So of course, when you talk about something like that, FICO is going to have a drop because it does challenge what they used to have as a dominant position, now maybe a little bit less dominant, right? Their moat is being challenged, essentially. That being said, FICO also trades at a very rich valuation. The market cap is currently $40 billion. That being said, their revenue run rate currently stands at roughly, let's have a look right here, at about $2 billion for 2025. They are trading at 20 price to sales. They got that valuation because of how predictable, how consistent their EPS and revenue was, and because of the dominant position that the company was in overall. However, when you start challenging the dominance of the company, it's very normal to see these very steep sell-offs. Now, the sell-off, in my opinion, is somewhat overblown. This is a fantastic quality company that you have before your eyes. Look at the EPS growth from last year through 2028. the EPS, guys, will be well over 2x in gains for the next 4 years. In terms of revenue from last year through 2028, you're talking about 50-60% revenue growth as well. So although they are being challenged right now, it could still be an accumulation range for anybody who has this one in their long-term portfolio. It's a decent place to start a position overall. I'm not opposed to having this one. However, it will suffer from some short-term volatility. The key levels of support right now, if we had to absolutely build a swing trade, well, now you have a stop loss level, right? The last 2 times that there's been news like this affecting FICO, we have a very clear stop location. So if we're trying to take longs here, it's a bit of a wide trade, right? But if we're taking longs from here, take profit number 1 is there at the top end of resistance. The stop loss goes below there, and take profit number 2 is about $2,200. So there is a swing trade here. It's a bit of a wide one, and there also is a possible entry for long-term portfolio positions, provided that you like this type of company. Moving on to company number 2, which is going to be FSLR. So they were down about 6.5%, and this one has been extremely volatile, guys, namely because of tariffs. Why? Because a lot of the solar panels, a lot of the products that are used to make solar panels are sourced from China. So this one has to deal with tariff risk, but it also has to deal with government subsidy risk as well, which is why the name has been extremely volatile as of lately. I'm not, opposed to playing this one, but I have to play it a lot lower. If I'm looking to sell puts on this stock, it would have to be down below here. FSLR has been ridiculously cheap for a long time, but because it has very clear risks, the administration has been very vocal about this. They are not very much in favor of either wind or solar. The administration is in favor of coal, oil, and natural gas. So of course, right, it is out of narrative right now. So when a stock is out of the favorable narrative, you have to play it with a little bit of caution, which is why if I'd be looking to build positions, I would have to get them at the bottom end of the range. Talking about CoreWeave right now. So CoreWeave was down pretty much all day. It started off early in the morning after the company offered to buy Core. So they offered to buy Core Scientific for a deal that was structured for about $9 billion. Essentially, I will save you reading through the article. It is giving Cores a buyout price of roughly $20 per share. And this is very odd. Now, the terms of the deal have not yet been finalized, right? However, if that deal does transpire, Core shareholders will be bought out at about $20. There is a potential arbitrage trade here, provided that the deal actually goes through. Usually, these arbitrage opportunities are filled very, very rapidly by the market, but as of right now, it has not been fulfilled. So obviously, CoreWeave dropped a little bit on that news. Usually, the company that is acquiring another company will drop by the quantity of the market cap that it is offering, or the quantity of money that it is offering to the company that's being acquired, right? And CoreWeave was no different. So we see a daily downtrend here. Support still stays put at 145. And I got a very good trade off on this one towards the end of the day when we had sell off round 2. I was waiting for this one all day. Early morning, it wasn't the best volatility. And I already had a CoreWeave short put on this one for 125 that I started last Thursday. I closed that trade yesterday at 80% profit, and I was looking for re-entry. I got my re-entry, guys. I got the 130 strike for like 80 cents. It was a very good trade overall. And it was one that I was telling everybody about on the top 5 options play video on the Sunday session. Here is the trade right here at about 3:15 p.m. We kind of got the bottom of that location. So I'm happy having a 130 strike for the next 3 days until the end of the week. That's another 14% to the downside. I would not mind playing CoreWeave down there. It has some good volatility. If I get assigned, I'll probably have no problem running some very juicy covered calls. So that is kind of the type of trades that I'm looking for on CoreWeave overall. All that being said, on to Affirm right now. So Affirm actually had a beautiful pop in the morning, and then kind of gave it all back, right? Top to bottom move was about 8.25%. Affirm has been moving extremely well. The daily bulls have been in control of this chart. Higher lows are set. But if we flush and unwind into a very natural, healthy weekly pullback, kind of like many other stocks are looking right now. Great expansion move over the last 5-6 weeks. And now we're looking for some pullback. I'll be looking to sell some puts on Affirm down here, mid to high 50s location into the most recent areas of support. You guys know that I have a leap call option on Affirm for 2027 and I'm holding that one, but I will be looking to play the swings. If we come down back here, I'll be looking to sell some puts down there because I do believe the bulls will be able to essentially continue on to this rally. The monthly chart is looking very good. It kind of looks like SOFI, all things considered. So keep that in mind. Reddit is kind of similar as well. Reddit had a very nice leg of expansion right now, and now we're getting a pullback. We rejected from resistance up here, 175 to 163, barely clipping into it. Now, if we start losing some of the lower time frames here, all we need to understand is we're looking for a bit of a higher low, right? And where can we find that? Well, anywhere between us and 95, a lot of space. EMAs are down there, 133. If we get a bit more volatility, you might see me sell some put options at the 125 down to 120 mark on Reddit. I think the valuation down there is somewhat fair. Got to talk about SMR as well. SMR has been on my watch list now for the pullback. We're looking for weekly pullbacks in the market right now with some good structure. Clear area of prior resistance, could be newfound support. The weekly EMAs are right there. If you find a bit more volatility, and we have had good volatility on this one, pulling back a little bit lower, I'll be looking to sell some put options down here, 30 to 26. It could be a nice little fallback area for the bulls, get a bit more momentum for another leg higher. Moving on to Elf Beauty right now. That's pretty much the last one, or one of the last ones that we'll cover. Elf Beauty, same concept, right? Rejection from resistance, which was pretty much up here, 140 down to 126. Now, I mean, we had one of the larger holders selling about 420,000 shares, which was 90% of their position, which did pressure the stock. It's been pressuring the stock over the last 2 days. That position was just disclosed today. So keep that in mind. In the event we unwind, we can see a clear loss right now of the daily higher lows. In the event we go into a daily downtrend on this chart right here, all we need to understand is we're just looking for a little bit of consolidation. The next area of support for ELF is 105 down to about 87. If we come back down here, you will once again see me selling put options on Elf Beauty. I think it's a very nice fallback area. That was the fallback area in October of 2024 and November of 2023. And all the weekly moving averages are there as well. So I think that this area is a nice one of confluence. And the last one I'll take a look at, guys, is Shopify. Shopify has been on my watch list. Well, it's perpetually on my watch list, but I'm keeping a close eye on it. In the event we unwind here and go into a little bit of a downtrend and unwind a bit of this weekly move, we got some very nice support down there in the lower 100s. You'll find me selling some put options on Shopify in the lower 100s. So keep all of those plays in mind. Okay, I guess I'll do Nike too. If Nike comes down, guys, after this beautiful rally after earnings, if we come down lower 70s, you'll also see me selling some put options down there, guys, under 70. I think it's a nice little retest area before we can maybe embark on some further swing trade longs. To the upside, we're going to do these quickly now because the video is getting a bit long. Soundhound coming up into the take profit area. 14 down to roughly 12.91 is the take profit zone. Beautiful level to level trade overall, but this is the take profit area overall. I would not be interested in starting some longs up here, even though you can make the argument that it's just going to blast through. Sure, but maybe we can be better served if we wait for a bit of a pullback, get a better entry, and then go for that style of trade if that's something you're looking for. Intel firing some of their workforce, right? So here we go. They said that they were going to fire. It's not here. This is the wrong article. But anyways, they said that they were going to reduce their workforce, which led to a 7% increase in the stock today. Not too bad. You guys know the drill, right? I've been saying the same thing on Intel for pretty much the last year at this point. Intel is a heck of a recovery story. It might be worth a bid, but keep in mind, it's a very long recovery story, kind of like Nike. So any position that is built here, you need to go into this one with a longer than expected time horizon. If you really want to see the 2x that people think Intel can do, you might need to put a long-term time horizon like 6, 9, 12 months. It's not my favorite company to play because their fundamentals are, let's just be honest, atrocious. And even the new CEO, right, said that this was going to be a very long turnaround story. So don't take my words for it. Take the CEO's words for it. But we can see a bit of a monthly curl in momentum. Now maybe we've ran out of sellers. We've built a good area of accumulation over the past year. Might just be looking for a bit of an upswing. So keep that in mind if that's something that you're interested to play. We got some oil plays up here. Those are pretty much the only ones that I really wanted to talk about. I mean, shout out to Micron as well. I was expecting maybe we can get a pullback on Micron, maybe down into the 110. It would just make a lot of sense here on the weekly timeframes. Beautiful expansion, right? The next clear area of support is kind of down here, 110 down to 100. We're not getting the back test just yet. A lot of trading to be had, right? We can very easily unwind this move. So if Micron does fall down a little bit more, you will find me selling some put options there. Even at 125, guys, Micron is arguably still very cheap. So if we're looking to build some shares from, let's say, here through down there on a backtest, and we're going for the expansion of Micron, this is a longer duration swing trade, right? It's a longer term thesis, kind of like AMD. You're looking for the expansion of EPS over the next 3 years, and you're looking for big expansion of revenue over the next 3-4 years as well. And the stock is still trading relatively cheap, so keep all of that in mind. Those are just a lot of the plays that I wanted to cover today. Obviously, we could talk about a lot more, guys, but there's only so much time in these videos, and I want to keep them to just around an hour, which, again, we have done today, right? If I didn't do this biggest gainers and losers section, all the videos would be like 40-45 minutes, right? But I figured that I should include this at the end just so we can cover the most amount of stocks, because I know a lot of you guys like the different value plays. Some of you guys like the growth plays. So I'm trying to cover the most that I can and give you guys some levels to kind of just, get some ideas for some possible trade setups and stuff like that. So hopefully you guys enjoy the extra section that I added onto the end of these videos. I'm sorry that the videos are a bit long. I know you guys say don't apologize for the length. We like them, but then again, sometimes it's tough to attract a new audience when your videos are an hour long. But I appreciate all you guys for your views and your comments. Right, so much love to everybody who takes the time to like the video, subscribe, and talking about liking and subscribing. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing if you're new. We do these every Monday to Friday after the close. And last but not least, if you want to drop a comment and ask me a question about the macro, about any stocks, about any options, feel free to do so, and I'll do my best to help you out. And last but not least, if you wanted to join a community of traders and investors such as yourself, you might consider joining our trading community, where we focus on trading the markets every day with our trading accounts, but we also focus on building very high quality, right, very high conviction, long-term portfolios to acquire long-term wealth in the markets as well. That being said, within the context of the Discord, within the context of our community, you get access to all of my trades in real time. That's all of the wheel trades and all of the directional trades that I ever make on a daily basis. You can see these are just some of the trades that we've made. These are weekly recaps. All the green check marks are wins. All the little red circles are little losses. So that being said, those are just a few of the trades that we've made in the past couple of months. And you get access to all of them in real time. We do private morning live streams Monday to Friday, where I trade live for about 2 to 3 hours after the open. We live stream, I trade live, I take all your questions on your stocks, your options, your long-term portfolios. If you're not there, they're always recorded. And you can also ask me questions in all of our chat rooms all throughout the day, and I'd be glad to help you out as well. You get access to all of our educational section, where I do videos on technical analysis, fundamental analysis, how to grow small, medium, large accounts. Also different trading strategies, right? Tutorials on call debit spreads, leaps in terms of call options, in terms of put credit spreads, and many other different things. Our members find pretty good value in that section too. And lastly, but not least, you get access to all of my watch lists, and all of my charts. You can just copy paste everything. It takes literally 10 seconds. You get all my watch lists, and you copy paste my entire chart layout. It comes with all the support resistance boxes whenever I do technical analysis, and all the fundamental analysis is copy pasted on the charts as well. It's just an added benefit for our members. If any of that interests you, the link to join is always down below in the video description. Hopefully I see you in there soon. And if not, I guess I'll see you right back here on the channel, guys. That's it for me. Take care. Pleasure as always. I'll see you tomorrow after the close. Peace.